We have seen President Biden's tax returns, and from those we actually have learned a lot. We know exactly what he and his wife make in Social Security benefits, and in this video I'm going to show you those amounts and show you how to calculate yours. So here's an actual copy of the President's tax returns from 2021. I don't know if he's filed as 2022 yet or not. Obviously, people can file extensions until October of this year, but this is the most recent one. And so, as I said in my introduction, there's a lot of things we can learn from this. Obviously, their names are on here, Social Security numbers, and the address have been deleted, obviously, for personal reasons. He does contribute to the presidential election campaign. That makes sense for sure. He also, it says here, he did not involve himself in any kind of virtual currencies whatsoever. And then they did check the boxes here of being born before January 2nd, 1957, which meant if they filed a standard deduction, they actually qualify for that additional standard deduction because of their age. All right, so that's what we gather for that. But most important, let's go to this page here. Same page one, just the latter part of it. And so what we're looking at here specifically as we look at Social Security, we're looking at line 6A, and this says Social Security benefits. Now, of course, they do file as a married couple a joint return. So what we have here is a combined number for what they are actually receiving in Social Security benefits. I have no idea if he gets more than she does, or this is 50-50, and all that's irrelevant. The point is, as a couple, they're earning right now, this is 2021, $54,665 in Social Security benefits. The president is 80 years old, Mrs. Biden is 71, and certainly everyone starts taking their Social Security by at least 70 years old because the benefit cannot grow beyond that. Okay, so they are definitely both taking Social Security benefits. Anyone who has paid in at least 10 years worth of taxes into the Social Security system qualifies for benefits. So again, that's a combined amount. Okay, so what I'm going to do, I'm going to take that total of $54,665, and we're going to break that down on a monthly basis. And so what we do know, that amount in 2021, they're receiving direct deposit into their account, $4,555 every month for Social Security benefits. Again, some of that's his, some of that is hers. Well, we know from 21-22, we had a 5.9% cost of living adjustment, an adjustment because of inflation, and so that would have automatically gone up by that 5.9%. Anyone receiving Social Security got that increase, so that benefit would have raised to $48.23. Then we got another cost of living adjustment because of inflation, and that was 8.7% from 22 to 23. And so now their Social Security benefit on a monthly basis is $5,243. And again, even if it's half-half, that means each of them receiving $2,600 apiece. Now, the average check right now for Social Security retirement benefits is $1,827. So we're talking about 2023. Now, remember, people take Social Security benefits one of four ways: either retirement, obviously it's on their own work record, or they can get spousal, they can get survivor benefit, or disability benefits. And so when we look at it collectively, the amount of average Social Security benefits, that's in the $1,600 range, but those that are receiving are actually retirement benefits. So they start taking on their own work record, that number is $1,827 for this year. Now the maximum benefit this year is $3,627 on a monthly basis. So this is someone that maxed out on their income, and not only that, they waited until beyond full retirement age, and so they're actually getting a check for $3,627. All right, so those are kind of some of the numbers. So what I want to focus on, though, is this. He is getting $5,243 on a monthly basis. So what I want to do is take the time now to really show you how to calculate your own Social Security benefits. Hey, just real quickly, if you're finding this video to be helpful, you can like, comment, and subscribe. And if you do so, that'll let YouTube know that this is helpful information, and they'll send it out to others who also need to learn about Medicare. So the formula for calculating benefits begins with this. They're going to take your top 35 years of earnings, right? Now, hopefully you've worked at least 35 years because they're going to take the top 35. If someone only works 25 years, then they're going to have 15 years of zero. So they take the top 35 years, and they actually index those up because what someone made in 1980 is certainly going to be more income now as they inflate that up. And so they want to make sure you're not losing because of inflation. So they index those amounts up, and they're going to take that total amount, and this could be several $100,000 dollars or several million dollars, and they take that and they divide that by 420 months. Again, that 35 years. So that total amount is divided by 420, and what that does is that gives us a number that is called your AIM. And what that stands for is your average index monthly earnings. And so that's divided by the 420. And so let's just simply say, let's say that amount is $5,000. Okay, $5,000. Top 35 years, indexed up, divided by 420, and let's say it's $5,000. So that's our average index monthly earnings. Now, that's certainly not going to be our Social Security benefit, because we take this number and then we apply that to a formula that has what we call bend points in it. Bend points. All right? And so the way it works is this. They take that number, and of the first $1,115 that we make, we get 90% of that amount. And then the number between 1,115 up to $6,721, everything in between there, we actually get 32% of that. And then anything above that number, then we would get 15% of that. All right? So 15%. So my point is, we're going to take that 5,000 and we're going to apply the first 1,115. We're going to get 90% of that. So 90% of the first $1,115 is $1,003.50. And then everything above 1115 up to 6,021. In our example here, we're not going to get that high. We're just going to 5,000. So the difference here is $3,885. And notice we get 32% of that. So we take 32% of that, and that's going to give us $1,243.20. Right? Now, in this example, we're not above this, so there's 0 here. And so this would actually be our Social Security benefit amount that we're eligible for. Now, watch this. And this is called our primary insurance amount in this example. So an average index monthly earnings, top 35 years, 5,000, applied to the bend points, and that gives us a check of $2,243.70. That's our primary insurance amount. Now, if I take my Social Security as early as 62, then I'm going to take a decreased amount of my primary insurance amount. Or if I let that account grow and I can actually delay it until age 70, then I'm going to get an increased amount. So this is taking early. I'm going to take less. It's a permanent reduction, basically 6% a year. If I delay it, then I can grow it up until age 70. I can grow that at 8% a year. These are called delayed retirement credits. So that's how we calculate our primary insurance amount, and that's what it would be if someone were to take at their own full retirement age. Now remember, anyone born between 1943 and 1954 has a full retirement age of 66. That's between 43 and 54, full retirement age 66. And then they would get that primary insurance amount. And so if someone born after 1954, the government began to add 2 months to every birth year. So if you're born in 1955, your full retirement age is 66 and 2 months. 1956, 66 and 4 months. 1957, you add 6 months. 1958, you add 8 months. 1959, you add 10 months. And then anyone born in 1960 thereafter has a full retirement age of 67. And the whole point is, once you reach that full retirement age, then you're going to get that full benefit. Again, we take early, we're going to take less, we take later. We can grow the account about 8% on an annual basis. So that's how we calculate how much our Social Security benefit is going to be. Now let's go back to the President's tax return, and let's learn something else that's critical to know about Social Security. So we looked at line 6A, which told us what he and his wife's Social Security benefits were combined. We know that. And then the second thing we're learning about this is how much, though, of that amount is taxable, subject to normal income taxes. For them, it was $46,465. It certainly wasn't the full amount, but it was that amount. And that amount is actually 85%. So 85% of the Social Security benefits that they received were subject to taxes. Well, how does the government calculate that? Well, we have a calculation that is actually called provisional income. Okay? Provisional income. And so what that provisional income is this. It is line 11, which is, you'll see it here, it's adjusted gross income. And so for him, it was $610,702, adjusted gross income. We take that, line 11 in this example, and we add to it, notice here, tax line 2A, which is called tax exempt interest. They don't have any of that. That's zero on their return. And that would be municipal bonds, could be U.S. government savings bonds that were used for educational purposes. Some of those can be tax exempt. But again, they don't have that type of investment. So line 11 plus line 2A ends up becoming what we call your modified adjusted gross income. All right? So we take that modified adjusted gross income, and again, line 11 plus 2A, and whatever that number is for them, you can see what it is. $610,000, and then we add 50% of their Social Security, right? Which in this example is $54,665. So that would be $27,000. It's 50%. $27,000. We'll just call it $332.50. So we take their adjusted gross income plus line 2A, tax exempt interest, which is zero, half of their Social Security benefits, and that number becomes their provisional income number. That's the number that we're going to look at to determine then how much of that Social Security will be taxable. Hey, if you're finding this video helpful, I want to invite you to go right up here and actually click on a link that will allow you to watch what I call the Medicare Essentials Workshop. It's a workshop that I did that really is going to show you everything you need to know about Medicare from A to Z, how to enroll, when to enroll, and the plan options for you. So go to that link and check it out. So when we took his adjusted gross income plus tax exempt interest and half of his Social Security benefits, his and hers combined, we come up with a provisional income number of $638,035. And that number is what will be applied to a chart that'll show us how much Social Security will be taxable. And so for them, the income that was subject to taxes was $46,465. Now remember, he made over $54,000, but not all that was taxed. And the reason for that is because the maximum would be 85%. So let me show you how provisional income is actually calculated. So what we have is we have those people who are single, who file a single return, and then we have people that are married, and they file a joint return. So what we have here is we have three different brackets, three possibilities. And so again, single filer, married filing a joint return. So a single filer that is at $25,000 or less, that's $25K, 0% of your Social Security income is taxable. So in other words, they look at your provisional income, so if it's below $25,000, zero. A married couple over here, it would be $32,000 or less, 0% of your Social Security would be taxable. Anything as a single filer between 25 and 34, in this bracket, 50% of whatever your Social Security income is subject to taxes, ordinary income. For a couple, that's going to be $44,000. Anything in between here is going to be 50% of it will be subject to taxes. So anything above 34 for a single filer, 85% of your Social Security income is taxed, and anything above 44,000 a couple, 85%. And certainly, they're way above the 44,000, and that's why 85% of their Social Security income was subject to taxes, which ended up being $46,465. So again, some people don't have to pay any taxes on their Social Security income. And that's because more lower income, those that are higher, are going to pay more taxes on that income. All right, so we've learned exactly what the president gets in his Social Security benefits, how much is taxable, and we also know now for you how much your benefit will be when you decide to retire and how much your taxes will be as well.